Welcome back to Stocklabs for another market recap. We are into November now, so really in the home stretch of the trading year, and it was a pretty action-packed week for markets, and it also was an extremely up week for markets as a change. So yeah, we had IWM was up 7.5%. The Qs were up 6.5%. S&P was up almost 6%, and the Dow was up 5%. With bonds printing almost 4% on TLT, and credit was also up almost 3% from here. Crude oil was down 4.5%, and gold was flat-ish, down 1%. So what happened this week? We had the Federal Reserve decision on Wednesday, and they held rates steady and kind of just, the reaction was very positive. I didn't actually listen to the particulars of the call just because I didn't have a feeling. I didn't really think Jerome was going to be saying anything different, so I wasn't paying attention. But market received his comments as dovish, and immediately went into sort of the mode of pricing in rate cuts again for 2024 and all of this sort of stuff. So we're back kind of in the same mode that we were in a few months ago when we priced in a bunch of rate cuts for 2024, and then market had to price them all out, and now we're starting to price them back in again. So you could see that this is kind of like a schizophrenic mode that the market goes back and forth between. But anyway, turned out to be a big up week. Really, the market was moving up into the meeting, and then it kind of just really accelerated after that. Wednesday, Thursday, Friday were all big up days, especially on the NASDAQ. And the Russell was the most oversold, so I mean, it did the best climbing out of the hole a little bit. I think this is the highest weekly close on the NASDAQ in a couple months. So, a lot of people are going to be looking to call that a trend change in the market. As far as our leadership stocks, as you can imagine, they all did really well, up 7% collectively. Nvidia was up 11%. Amazon up 8%, kind of continued its run from, I think it printed like 117, something under 120 going into earnings, and then it's up, 20 points since then, basically in a straight line. So Amazon looks good. Probably, I would imagine it's going to run all the way into the end of the year. Same thing with Microsoft. Had the big print on earnings. It's, sort of extending its run post earnings. Google bounced, even though it got hosed on its print. Apple was moving up during the week, opened down on its earnings print this past week, but then, sort of came off those lows. I think it still closed red on Friday, but closed kind of near the high of the day. So, I mean, it was being bought all day, even as it was red. So, really strong week for this group, really strong week for the market overall. If we look at industries, green across the board. Healthcare up 7.5%. So this has been a big underperformer for weeks and months on end, and possibly kind of a trend change because all of a sudden it's the best performing one. I mean, granted, it was one of the most beaten down sectors. Utilities also had a really nice week, up 6%. I had mentioned this a week or two ago that utilities kind of looked like they were starting to sniff out a little bit of a change in the rate environment. So these will definitely come back into fashion. Rates don't even really have to come down that much. It's just as long as there's somewhat decent visibility on what the path will be, think the dot plot and all this stuff that all the hand wringing happens over. If there's visibility on that, and it at least looks like the rate environment will be stable, you'll see the utilities trade a little better than what they have for the last, let's call it a year. Tech stocks pretty well, up 6%. Services up 6, financials even up 6%, consumer up 5.5. Basic materials up 3%. So, I mean, like I said, gold didn't really do too much. Crude was down. So, material is going to be an underperformer in that sort of environment. But with everything else doing this well, probably portfolios aren't going to notice that yet. As far as subsector wise, you can see this is like the best performance we've seen. I mean, double digit up moves in a lot of subsectors. So I don't know what the, you see there's different sort of breadth thrust readings that get passed around. I didn't see if there was anything that specific this past week, but just from a Stocklabs perspective, when you see a move this strong, most likely there's going to be some continuation. This isn't like a one-off thing, especially coming off of a low. Let's see, 50, 75, 100, 25, 150. So 168 sectors or something, up over 5%. So, I mean, that's real, what I would call flow. So I don't think, the breadth, it was just really good. I mean, it was the index performance reflected the really strong breadth that, the market had this week. So if we look at breadth by market cap, we've got 1 to 5 billion up 8%, so even better than the Russell. 5 to 10 billion up 6.3%. 10 to 50 billion up 6.4. 50 to 100 billion was up 6.2, and the TerraCaps 100 billion plus up 5.5. So, I mean, again, really strong. I mentioned this last week. I mean, it was also pretty uniform too. You saw some slightly better performance on the low end of the cap spectrum. So, I mean, maybe you read that as like a little bit extra risk on, but also those were the worst performing stock. That was the worst performing cohort going back, over a year. So, I mean, it makes sense that if there's some kind of trend change, those ones come off the lows the hardest. But yeah, really strong breadth. I mentioned last week that everything was starting to move pretty uniformly up and down the cap spectrum, and also like across industries and everything. The market was all moving as one. So this tends to happen when, like I mentioned, the volatility picks up and it's just like, either it's risk on or it's risk off. I mean, this sort of everything went risk on this week. As far as intelligence for the coming week, what do we have? Okay, so Stocklabs looking for up move in oil, up move in Mexico. I'm just going to ignore that. High beta, so think of this as sort of like Russell 2000 type stocks. And commodity related type stuff tends to fall in this high beta area. Biotech too. Consumer discretionary bullish. Inverse VIX bullish. Some Bitcoin thing is bullish. Uranium miners bullish. Short China. And bear treasuries is bullish. So we'll see if the rates, rates came off hard. I think the 10-year was down like 50 basis points or something for the week. It was something like that. I don't know I forget the exact number. So, we'll see if rates start backing up again, or if they sort of chop around here. But Stocklabs seems to think maybe it's worth a shot being short the bond market. And if we look at the inverse of this, we have, okay, inverse Bitcoin is bearish. ARK is bearish. I mean, TARK, this is leveraged ARK, but so ARK is bearish. Big banks are bearish. Biotech is bearish. Nvidia is bearish. Bull treasuries are bearish. Okay, so same thing as before of the other side. Treasury market bearish. Korea bearish. I did see some sort of thing. I think it was South Korea was banning short selling or something. Announcement came over the weekend. I don't know if that's going to play a major role, but I mean, usually when you see those kinds of things, it's not good for that market. VIX bearish. Semiconductor bear ETF is bearish, so bullish semis. Some kind of credit thing. And cannabis bearish, as always. So yeah, I mean, I think for the week, you're looking at, markets kind of pressing up towards this overbought area again. We haven't been overbought in the market since first week of June, second week of June. We had a lot of oversolds down here in the last few weeks, and you see we're going straight up now. So if we hit this overbought line, you might be better off taking some risk off or hedging or something like that. As it stands for this week, I think you're in for mostly a choppy-ish week. Definitely the market's going to want to digest some of this vertical move it just made. So if you just got in on Friday or something like that, don't be surprised if your position takes a little bit of heat or something, even if the overall trend ends up resolving higher. So, yeah, I think the bulk of this upswing, has kind of been made. We're probably going to, like I said, chop around, pull back a little bit, and then see if we can continue higher. We have the debt ceiling thing that's going to come back into the picture. Could be this week. I mean, the deadline is I forget, 15th or 17th, one of those days in November. So expect the rhetoric to turn back up. And as always, you can expect something, all this stuff with these wars flying around, there's anything on a particular day can knock the market lower. So, especially if people have felt like, you went the proverbial too far too fast, any reason people have, they'll start taking some profits, at least in the short term. So overall, I think, you're pretty safe, but, back and forth action is good in the market, and I'd be looking for some digestion and then some continued upside, at least into sort of the Thanksgiving, end of November type time frame. So that's all from me. Hope you guys have a good week out there. Hope you caught some of the upswing this past week, and we'll be back at the end of the week to see how it all went again. So talk to you guys later. Bye.